Hello and welcome to part 2 of chapter 5, where we will be doing what's called a bank reconciliation. So our objectives today are to complete one and then also to record and journalize something called a bank service charge. So first off, when you have a checking account, your bank is going to send you a bank statement. And a bank statement is simply a report of all of the deposits, withdrawals, and bank balances that are sent to the depositor by a bank. Now, we've talked about deposits. Remember, deposits are money going into your checking account. Withdrawals are obviously when you write a check and money comes out of your checking account. So, when a bank receives a check that you have written, the amount is then deducted from your account. That's our withdrawals. So, we call checks that have been paid by a bank canceled checks. And I know that sounds kind of weird because canceled checks kind of sound like they didn't go through, but they did. That's just the banking terminology. A canceled check is a check that has been paid by the bank. So a bank's records and a business records could be different for several reasons. And this is part of the reason why we want to make sure that we do what's called a bank reconciliation to make sure that they are equal. So some reasons why they might be off is that a bank's record would have record of something called a service charge. Some banks charge you for having a checking account. Some banks offer free checking, but charge you for things like ATM withdrawals. So service charges would be recorded with the bank, but not with the business. Then you could have outstanding deposits, meaning the business has recorded that they have deposited money, but the bank hasn't had an opportunity to yet. Same thing with checks. You may have written checks as a business, but the person that you gave them to might not have cashed them yet. So the business record would be different than the bank's record. And then, of course, you could always have errors, either by the business or by the bank. So you want to make sure that you check, make sure that everything is equal. So a bank statement is reconciled by verifying that the the information on the bank statement and the information from the business's checkbook are in agreement. So typically what you do is as soon as you receive your bank statement, you do a reconciliation. It is a very important aspect of cash control because if you let things go too long, one, that's not very good practice at all as a business. And two, you always want to verify that what the bank says is what you have as well. So here are the steps for reconciling a bank statement. And again, we're going to go through these together when we do the work together, but I did want to have them just in one place so that you could come back and check them quickly if you needed to. So the first thing is obviously we're going to do the date. We want to make sure that we have the balance that's brought forward on our next check stub. We're going to check for any service charges. They are oftentimes abbreviated as SC. And then we're going to balance our bank statement. Then we're going to look at our outstanding deposits. So checks that we have put in, but maybe have not posted to our bank statement yet. And same thing with outstanding checks, which are checks that we have written, but have not yet been brought through the bank yet. And after we do all 6 of those steps, then our bank statement and our checkbook should have the same number in our checking account. If they don't, that means that we have an error and we probably need to go back through and try to do another reconciliation. So again, as I stated, on the left-hand side is a reconciliation for our bank statement, for our records as the check stub, and then we have the adjusted bank balance on the right. So again, we put our date at the top. Here's our next unused check stub. Check number 14 says that we should have a cash balance of $2,622. But the bank charged us a service charge, according to our bank statement, of $25. So we technically need to deduct that from our checking account. And so you can see our adjusted check stub has a balance of $2,597. Then on our balance on our bank statement says that we have $3,292. So remember, these are our two starting points, and you can see how we're off by quite a considerable amount, almost $600. We're off. Our checkbook says we have $2,600, and our bank says we have $3,900 or $3,200. So that's a problem. That's why we're doing our reconciliation. So the first thing we look for our bank statement is any outstanding deposits, and we made a deposit on January 31st of $685. But remember that the bank probably sent us a bank statement on January 31st is when we received it, so they probably ran it on the 29th or the 30th, which means that they wouldn't have record of that deposit yet. So we need to add the deposit to the bank balance. So now we go up by $685 to a new subtotal of $3,977. Then we also go and look through our checking account and see which checks have not been cashed yet. So you can see we have three of them. Check number 11 for $35, check number 12 for $800, and check number 13 for $544. And we total all three of those, and those are our total outstanding deposits, or excuse me, checks of $1,380. And so then what we do is we take our subtotal and we subtract out the checks that haven't been cashed yet, and you can see we have an adjusted bank balance of $2,597, which our next unused check stub and our bank balance now equal. And that's what we wanted to have happen. So we're good. That's the point of a bank reconciliation. Now, because the only thing that we don't have record of on our side of things in the business is a service charge, you're going to notice that on our check stub, we have a spot where it says other. This is a place where you could write things like a service charge of $25. So on your next unused check stub, which remember was number 14, if we go back here, our balance on check number 14 was 2622, we need to add in that we had a service charge. Because what happens is the bank just automatically withdraws that out of your checking account. If it's a yearly charge, if it's a monthly charge, whatever it happens to be, they take it out of your checking account and they assume that you're actually going to look at your statement. So many people don't even look at their statements. They don't even look at their online banking. So it's very important that you do that. And so we have our new updated subtotal of $2,597. So this just walks through those steps. We just write it down, write the amount of the service charge, and then record your new subtotal. And so this just kind of talks about what we need to do, because we do need to journalize it. We can't just have a bank service charge just hanging out there, not journalized. So as I said, the bank is automatically going to deduct these service charges from your checking account. And so what we want to do to record that bank service charge on our check stub, but we also need to journalize it. Remember, though, that we never wrote a check for this, so we can't use a C. Instead, we're going to use a memorandum or an M. And typically, because service charges are so small, they're not really big amounts, typically what we do is we put them under miscellaneous expense. So miscellaneous expense is going to be debited, and cash is going to be credited. And we're just going to plug that into our journal like we would journalizing any other transaction. So the date that we receive our bank statement is the 31st. We plug that in. We put in miscellaneous expenses, our account title, and put in our debit of $25. We have our document number is M3, and then we credit cash for $25. So we're going to head over to MindTap. We're going to do our 5-2 work together, where we'll do a reconciliation and then we'll journalize the payment of a service charge.